we know what they did. Now, what does that mean for hedging? That's what we're going to talk about. Like, now that they're long 100,000 or maybe 120, what does that mean? And what are we looking for out of a hedge here?
Hey, welcome to Hedge Heads, where we discuss the commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. Well, no one knows where the market's going. We're not afraid to share some ideas. I'm Ryan Tunkseth. He's John Prishman. Well, John, I am going to be totally distracted on this episode because we almost look professional in our studio right now with this super fancy soundboard that I don't even know if we're actually recording our episode right now.
There is a lot of lights on that. I don't know. There's a lot of different colors. It must mean that it works really good because, it looks fancy.
I'm pretty sure we added like 500 more listeners just by turning this thing on.
I'm excited about the sound effects buttons. When we get those dialed in, we're going to have among the best sound effects in the business, including Fast Money or Mad Money with Jim Cramer. Bye. We'll have better sounds.
I have not even opened the user manual yet. I just turned it on and plugged it into the computer and started recording. But there is a trombone sound effect on here that I think would work for a lot of your takes.
Yeah, we'll wear those buttons out, but I don't know that it sounds any different. I'm closer to the mic. I almost have the fuzz in my mouth, but hopefully it sounds good. We got a new board and new technology.
We're moving on up. I'm sure no one listening though wants to hear about our technology though. So, what are people talking about on the phones? What do people want to talk about this week?
It's been quiet, and this is the sign of the time. So you had obviously the election that influenced a lot. And if you were hoping for it to be easy and smooth and very predictable, you'd be disappointed. It's probably some of the toughest markets I've ever seen. I wouldn't say most volatile, but just on a daily basis, tough to know what is going to do. And probably the most interesting market, I would say, just from the way that the funds have positioned, is the corn market. And we have been talking about it. But really what's happening is incredible. They were short 350,000 contracts, meaning they had sold that many, with the idea that it's going down. And then it got to be a tired bear market, which it often does in the middle of the summer. And I think it was towards August it made its bottom. And since then, they've added 450,000 longs net. So not everybody got long at the bottom. But now what's happened is they flipped and now they're net long 100, maybe 120 with Friday. We can only see till the last Tuesday, I believe. They put that report out on Friday that shows the positions in 3 different categories for the future. So that's how we know what's changed. But it lags a number of days. So we might be 120. So what's an extreme position? An extreme position would be 350,000 shorts. That would be an extreme position historically, very extreme. And that's when you start looking for bottoms, and that's exactly what happened this time. What's weird about this market, or odd, is that they turned around and bought it, very aggressively beyond just some short covering, which you don't see that normally this time of year. 2020, you definitely did, but that's the year where all the numbers were wrong and China was buying every day, and quickly the numbers were changing. So they bought in August on that report and then quickly built a substantial long position. But beyond that, I can't think of when this has ever happened other than maybe summer weather. So these are 2 extreme moves. Now, what does it mean? That's the most important part. For hedging, normally this sort of thing would have allowed an opportunity. What was odd about this is the time of year that it happened. So basically, everything off the combine that was coming in that got sold or couldn't be stored, and then some regular farmer selling happened that offset the buys coming in. So it only moved up 20 cents while this was happening. In a summer market where the weather's bad and no one wants to sell that market, this thing could have went up $1.50 on that sort of buying. But we didn't get very much movement. What does that mean? it was offset by, they basically exchanged hands. The physical guys said, hey, we'll sell it to you for that price, and they took it via contract. As a matter of fact, they bought more than even exists bushel-wise carryover. So they got that's a big, giant bet. So what are we looking for here? Well, South American weather, which is perfect. That can change, and we got a ways to go. And then the front-loaded Mexico buying. Now, did they buy just on the headlines? Have we gone all the way backwards to where you can look at a headline and buy? I mean, we're going backwards. The market's less efficient than ever. That's what I think happened. I think they just saw all the front-loaded stuff. Now, guys are going to debate whether Mexico is going to continue to buy, and this is just the beginning, or if it's politics, back to politics. Did they buy a whole bunch because they think there's going to be border discussions, is a nice way to put it, and also, what are they going to do about the trade with China, and obviously Mexico is going to be a part of this. So that's the mystery. We don't know. Is this a good bet? It might be, them getting in on the ground floor because demand's going to stay this good. I don't think that's the case. I think this is just some news that kept building on itself. And I think with a higher dollar and the great South American weather, unless that changes, it's probably not going to be the best bet in the world. But it didn't go very high. So very confusing market. You can't really tell what happened other than they got very long. And you can see that one of two ways, that they know something. Like if I talk to anybody on the phone, that's almost always the first thing they say. What do they know that we don't know? These guys aren't some magical deal. I mean, they did it very well in 2020 with this. Got ahead of everybody, got long, made a lot of money. That doesn't happen actually very often. They usually get caught holding the bag. So they're betting on obviously something changing that we don't know right now, because we have 1.9. Best case scenario, that's 1.7 if demand stays like this. And really, that's going to be plenty of corn going into next year. So very interesting market, very tough, but how are we going to use it for hedging? What we're going to do is know that these guys are very long, and it's going to be a very vulnerable market. So you take it day by day, week by week, watch that South American weather, and then make all your hedging decisions based on what direction that's trending. Meaning, if we come into January and it looks really good and there's rain in the forecast, I'm definitely going to be going on the hedge side of corn, assuming that it's somewhere here or higher. If the weather's bad, there's plenty of room for these guys to add, 150,000 more. So you can go either direction. I know that doesn't mean anything, but just know it's very vulnerable up here because they've committed, it's fuel for the fire. That's how you get prices higher, these guys buying. And they're very long already. Very unusual market. You're not seeing this in wheat. You're not seeing this in beans. As a matter of fact, they're spreading. Corn is long leg against long corn, short wheat, long corn, short beans, long corn, short meal. And anything you could spread feed-wise, the corn's the long leg of this. So it's setting itself up to be very vulnerable later on. But in the short term, it's also very powerful that they bought this. I don't think that they bought this with the idea that they're going to get out of all these positions right away either.
It is interesting, especially even looking at the spreads, and we like to refer to the spreads too. And when you look at the structure of corn, it is significantly different even than beans, wheat, in what you're seeing, right?
Yeah, very odd structure to it. The December 25 has been the contract that seems to go down every day no matter what. Like, they just won't allow for a good hedgeable price up there. They don't want carry in there, but everything else has carry. So it's indicating it's going to get slightly tighter going into spring. You have 11 and a half cents carry up front, pretty normal. I would say it's either 10 or 11, 9 out of 10 years. Last year it was negative 17. It was really wide last year. But this is normal up front. It's been narrowing a little bit. And then as you go to spring, very normal structure that you would see normal this time of year. And then, of course, you have July being the highest price contract. And then quickly dropping off 10 cents cheaper is December 25. And that's where it gets odd. You don't normally see the next crop year almost the same price as the front of this crop year when you have 2 billion bushel carryover. Who's right and who's wrong? Well, we're going to find out. That's what makes the market. They've made a large bet on higher prices in corn. Weird time of year to do it. You don't see this very often. They usually build a position fairly slow. And And I still think that what's not being talked about is the South American weather. It also is a little too early to say this is a record crop, but honestly, this is the best I've ever seen that start out.
It is interesting. I do think, especially here in the Midwest, that South America is underestimated, both in how it affects our price and what they are growing and producing and shipping out to the world right now.
Yeah, and their demand has dropped off here. They're still shipping to China, as we are too. And their demand has dropped off, now our board also starting to drop off. So they're getting to be more and more almost that we're following South American prices, because if we don't and we get much more expensive, then quickly all the demand goes over there. So it's evolving very quickly into South America leading our prices, and it's been happening for years, and it's becoming more normal. If we're going to lead in prices, it's going to be this time of year. This is the time of year where South America's supplies are drying up. There's not a lot for sale, and if it is, it's usually above our price because we have lower prices at harvest. So we see this little window where we get almost all our demand for the rest of the year. Super important, and we are seeing that demand definitely in corn, and we're seeing it in beans, but no more than the USDA says. But it is happening. But what the worry is this window is going to continue to shrink, and we saw that last year. I was in a bull spread May, July last year in beans. It did not work for the first time in many years, especially with that carryover, because we're losing that export window where it was very late. It was very dry in South America. I mean, we didn't have rain all the way through December last year, and it still turned out to be a monster crop. And this year it's right on schedule or ahead of schedule, and it looks to be available a lot sooner. So that's going to shrink that window even more. We used to own November through June, really. I mean, they would always say March, but in between like the gravel roads and the muddy and the trucker strike and just the bottleneck of the logistics, that's all been taken care of over the last number of years with investment from China. And it's really a rapidly changing market. That's why we're looking for different markets for our beans right now. But interesting nonetheless that it is going to be a huge issue going forward that's going to be talked about nonstop. I think the previous record was 153 million metric tons, and now we're looking at a possible 184, this year, and that is a significant increase in supply in the world. And then when you start, you got cheap feed in the world, corn's not going to take off by itself if there's plenty of wheat and there's plenty of beans around or plenty of meal. And it just drags on all the other commodities. So we have kind of what I think is the calm before the storm in between all the Trump tariffs talk. We don't know what's going to happen to all that. And the South American, whether this is going to be what it looks like.
Interesting. I don't like to do public math, but are you saying basically a 20% increase from 150 to 180-ish?
If the weather holds, that's what they have projected, and it's the kind of game changing numbers that we saw with corn a few years ago. They went really heavy in corn, and it was a good crop. And our exports were near non-existent. I think that was 23 or 22 going into 23. And but since then they've gone a little heavier on the beans. So yeah, we have seen it affect both markets. And it's going to be, they're not going to let up. They're going to plant more and more every year until it doesn't pay. And they're able to operate at a cheaper expense than we are. Thus, our beans will be driven lower, which is what we're seeing right now.
That makes sense. Talk to me about soy oil. Easy for me to say.
The last report had us at 10-year lows, for stocks this time of year. This is normally where it gets drawn down. And then stocks can build going in as they crush the large amount of beans. But we have the biodiesel programs. That's going to be, that thing is going to be hard to pinpoint where all that stuff's going. Politics are going to influence that a great deal. And you've already seen that with these picks. Like, oh, this guy hates biodiesel. Boom, the market crashes. The next day it's like, oh, he's not even confirmed yet. And we got 2 or 3 months before this even needs to be worried about, and then it goes straight up. And that's what we're dealing with. That's why the markets have they were already hard enough. They've probably gotten harder on all this headline trading and all this stuff. So that's up in the air with the biodiesel. If we ban Chinese cooking oil, which is where we're getting most of our biodiesel imports, that's recently changed out of China too. They dropped their export tax on it, so it's going to be more expensive for them to export to us now. Anyway, so that'll be in the days ahead. So soy oil, bullish, short term. Soybean meal looks terrible. It's acting terrible. It's at what? Multi-year lows right now, I think today, 290s. So tale of two markets there in the byproducts, that's for sure, out of beans. The crush was gigantic in October. So demand domestically for corn and beans, wonderful. Like there's no argument there. But we have a lot of stuff that's going to affect the markets in a very short window coming up. And you're going to see, I think you're going to see a lot of volatility in the days ahead. And for me, it favors the downside more than the upside, but this market could surprise you on either side right now very easily.
So last week you had mentioned like a super basic idea could be to buy a put with time but hold it for like a 4-week window or something would be a super basic option.
Yep. If you're worried about the South American weather and that's remaining good, you might want to cover the downside. Other guys are still calling and like, hey, should I re-own this or calls? It feels like everyone's really wore out from that over the last few years. I haven't done a lot of that, but anybody that has done that has not made money. Unless you got really lucky in your window last year, it's just kind of been the sideways lower market for a long time. So I'm not getting near as many calls to re-own anything, and that has to do with it hasn't worked, and the money's drying up. You know what I mean? They're like, I can't spend 14 more cents when the margins are this thin to reopen that upside. But if there is excitement, it's going to be South American weather, and then quickly it would go higher. So more guys have been calling, and they just ask about whether or not they should, roll the contract here coming out from December to March, when to roll it, even though it's getting closer now, so everybody's kind of taking care of that. And then it doesn't feel like a big group is ready to sell. Like, it doesn't feel like this is a good enough price where when you talk to guys, they seem very confused by what the market might do, and they don't know where to sell it, but it almost feels like they'd be willing sellers, 30, 40 cents higher than here very quickly in corn compared to last year. But it doesn't feel like they can't wait to sell it right now and they're worried about this price dropping off. It doesn't feel like that at all.
Interesting. What about the cattle market?
3 big days up. I mean, that's another market. You get this laser focus with this money, and it just happened in corn where they can't get enough of something, and it's called inflation buying. Cattle has got good fundamentals. Sale barns are as hot as you can get, but now we're carrying a premium to cash. Before we were carrying that heavy discount we talked about 2 months ago, probably 2.5 in the podcast. Now we're carrying a premium, much better board to look at hedging on. The bulls are saying there's no cattle out there, which has been the case for a long time, and there's no herd expansion. So it's only going to get tighter when they retain what they need to make more baby calves, which would be a heifer. And they're saying it's going to get ultra tight, like you've never seen before. So you get that talk. I think it's going to be something in between here. We got a nice run up. It's probably going to hurt demand eventually on the beef side of stuff, and that'll probably end the higher cash. But seasonals go till February, and it's had a great little run here. The funds absolutely love cattle. They love the deferred cattles. Who would have thought with cheap feed that they were going to buy a bunch of deferred cattles, but they can't get enough for like December 25? And so you've seen these really weird patterns, but they love cattle for right now. And that's helpful if you're looking for hedging. But it's going to be a game of hot potato eventually where you're paying this price at the sale barn, but then how are you going to make it on the back end unless cattle keep on climbing? So it's going to be tough to get profits. You have to get off the ride before the inevitable crash, which always happens in cattle. So if you're looking at seasonals, February is that top. I don't know. Cattle are heavy. I think they're going to feed them even more. And then some more are going to show up, but then back to politics. Export markets. Less cattle come in, more cattle come in. Who knows? I mean, honestly, we have a lot to talk about over the next few months as the politics become more clear.
It will be interesting also on that side as we watch both like economic forecasts and interest rates, all these markets. You've talked a couple times already on inflation buying. Is some of this inflation buying? But then you look at like the performance of the dollar, some of these interest rates, those things, and it still seems like everything's trying to figure out what this all means.
Well, without a doubt, the hardest trading environment I've ever seen. You have interest rates soaring up to those summer highs again right after the Fed cut because they can only control short-term rates, and that hasn't even worked very well. At the same time, you've got inflationary buying, which you normally see that at the same time as rapidly rising interest rates. Throw in a rapidly rising dollar up to multi-month highs, and then it's like this mix that you wouldn't normally see, and then you get these random markets like cattle where they want to stick a huge amount of money in very quickly. That skews these markets. Corn, they haven't been that interested in beans or wheat, so it's not, you can't count on, it's not a broad spectrum. Natural gas lately, we have a lot. It's been a very mild winter last winter. We have a huge glut, but natural gas has got that tailwind. So you get these real unpredictable markets where they just can't get enough of. Historically, it's a very poor investment because you have to roll these contracts, you're paying cost to carry, and it's not like a little stock that you put in your back pocket and wait for it to work. So historically, this trade has not worked out unless you go back to maybe Germany way back, when they had, before the hyperinflation, everything just got progressively more and more expensive. A lot of volatile spikes back and forth. Are we beginning that? I really doubt that, but it's a very, very difficult market. People are doing lots of different things in the market, and it doesn't seem like people are connecting really well with it. To me, that's what I'm seeing.
Yeah, it makes sense.
Including me. I can't buy a winner.
No, I feel the same way. I will say I have one position on, and I plan to hold it for quite a while.
Yeah, you go through these spurts where there's like 5 different things that look great. And then you go through periods like this where like, I have no idea what's going to happen. I should just go for a walk. And yeah, you just recognize what markets you're in. These are really tough to read markets that seem to change their attitude every day. Like we're just as likely to be up 7 in corn as down 7 tomorrow. Like flip a coin and it could easily be either one.
And the headlines will come out 2 days later telling you why.
Yeah, that's one. I kind of forgot how this all works with Trump. They're gonna overdo everything for headlines, and it does influence the markets. But I think they're getting used to all these big doom headlines where he picks somebody and now we're gonna get rid of the biodiesel program. It's not gonna happen that way. Like things will be a lot smoother than that. And I think from 2016, just everybody screaming at the top of their lungs every day, people are already going to get wore out from doing that. So I'm hoping that the algorithm buying on these headlines will probably the energy will probably start to wear off from that. And we'll get back to normal markets, which are still incredibly difficult, of course. Right. But, at least they're a predictable crazy is the way I like to put it.
The predictable, and when we get back to the not crazy move, I don't want to use the word crazy actually, because I think it's more just still absorbing the changes over the last 2 weeks. But when the markets get back to regular programming, there'll be opportunities to hedge, no matter how wild and crazy they are. There's always opportunities to market.
Yeah, and usually these windows will come out of the blue on maybe a story, and all of a sudden you have hedgeable prices, and then you got to make decisions really fast. That's where guys need a lot more work, is they like to think about it. Oh, let me think about it. Let me him and ha. That's their favorite move because it puts off making that decision. There's things you can do where you can lock in the price by buying a put, have the upside wide open, and then have a limited risk. I mean, there's in-betweens, and that's where guys really need to concentrate, start looking at that. I over the years, I find guys really don't like to buy puts, and I don't know why that is. Commodities tend to fall. I mean, it's a strategy that works more often than not. Obviously, timing is incredibly important there. But for some reason, people only like the long side, and their mind works that way, be it that you think you're positive and things are going to get better. That's probably it. I mean, you raise it. But really, a good hedger is the best hedgers that I know think the market's going to fall more often than go up, and they seem to do the best, and I think history backs them up. That's why. I mean, but once you learn that, go with the flow, that you can make money on both sides. That's what hedging's for, to lock that price in. But I personally like the strategies where you have your upside open, you don't have margin calls, and it makes sense to lock in that floor. That's what I like at times of year that it makes sense. Other guys like the free route. They like to, I'm just going to market it because it's free and then it's gone. But we don't know the South American weather. We don't know if the funds are going to add substantially and drive corn up. So for me, the way it works for me going into growing seasons, I like to leave the upside open where a lot of guys are just looking for a spot to sell. And I'm sure that's what's going to happen. They're waiting for corn to rally and then they're going to sell stuff that's in their bin. I don't like how predictable that is. And it doesn't work out when everybody wants the same thing. And that's what we saw last year. So I'm going to start looking at strategies. If the funds add, here's what I'm looking at. If the funds look like they're done, here's what I'm looking at. I know I didn't say what I'm doing because you can't. But that I am, because you have an extreme position now made in corn, you need to start planning for it. Beans are a much more difficult market right now. And wheat's the worst. I meant good luck trying to figure that out. It's like it's got all the potential in the world, as it always does. Just like Lucy kicking, or Charlie Brown kicking the football with Lucy. It looks like, boy, this time it's going to be different.
This is
the one. Here come the exports. Look out. The mega bowl. Then, of course, it always disappoints. And then when you give it up on it, it'll go ripping $1.50 real quick on you.
That's usually right when I sell it. If you want to know if I sold wheat, look for that $1.50 run up.
Actually, we might start charging for this very signal that you said. The Ryan get the opposite of Ryan wheat signal.
I like that.
Yeah, it'll mint millionaires.
Oh my gosh. Yeah, if you want to bet on wheat, I'll tell you what position I took and you take the other side.
In order for this to continue to work though, you have to go with your gut. What does your gut say about wheat? You can never change.
Right.
I mean, you just got to go with it, and we're going to be on the right side every time.
I like it. Well, right now I have zero feeling on wheat, so there you go. It could go either way.
I like I saw this on Twitter. The guys, like, if you want to feel bad, I might even said this last time, just think you would be a multimillionaire if you took the other trade, you took the other side of every one of your trades right now.
Yeah, I don't even want to think how much.
I don't think it would work that way, but you do find some good stuff on Twitter every once in a while.
Yeah. The problem is it's not always about actually being on the other side. It's also exactly when you entered. It's actually getting out or not getting out, because timing really is 90% of it.
It is. If you know what you're doing, especially with puts, the market's most likely gonna fall. And if you have the time frames right to some degree, you can be way off, but enough time. For me, the hardest part, and I struggle with this a lot, is knowing where to get out. I think that's one of the hardest things to do. Actually, getting profitable on put options is not incredibly tough because, like I say, if you do it right, markets tend to fall more than they go higher. But it's the greed factor. Where do I get out? And I had a whole bunch of soybean $10 puts on this last spring. And I made very little money, and other people did very well on my same idea. But my exit and entries were absolutely horrendous, where guys that just did nothing did very good. But then at the end of the ride, like you said, you don't buy a November put and stay until November. You can, but generally you're going to find the low nowhere near November. And that's what happened this year, August. And then it came ripping out of there. And that honestly is pretty common to find an August or September low. Very common, and that the market did exactly what it normally does this year. So greed gets a hold of guy. You want to make more, and you tend to stick with it, or the market was really volatile and your premium really jumps. Then you kind of stay with it to see what it's going to do for the next few days, and the panic kind of subsides, and the premium just melts away. That's one of the biggest mistakes right there. The market might not even have gone the wrong direction for you. It's that panic is gone.
Yeah.
So I like to sell my options, calls or puts, right at right in the frenzy when everybody's running scared, or they think it's going to $1 million if you have a call. Then that's where you tend to get the best premiums. But I traded so poorly getting out of options this year. It's just terrible.
I mean, I was right there with you on the soybean puts, and it seemed like you got out on the frenzy, and then all of a sudden there was a frenzy that was 10 times what it was.
Yep.
And
Yep.
that happens too.
Oh, I did the right thing. It's 10 cents solid profit. That's great. Great trade, John. Then you get out and it just melts down every day. You stay with that thing, it takes that 10 cents back from you very quickly.
Yeah,
And that's
absolutely.
as long as you know that's the way it trades and it's always looking at you and wanting you to do bad, then you'll be fine.
Right.
As long as you know the market's out to get you.
Always.
I mean, it never stops looking at my positions, and it likes to just press its little thumb on me. Even if it makes money, it's got to pressure me, or I don't like the trade. I don't like those, let's just buy it, easy money. That's no fun. You got to have that, am I going to lose my house on this trade before it works in order for trading to be fun? Or at least that's my style. I didn't plan it that way, but it seems that way every time.
Speaking of the market looking at you, I don't know that we want to get into it in this episode, but something for a future one. Limit orders. The market is watching you when you have limit orders.
Yes, we're going to have a whole episode on market and limit orders. And that is going to be something you don't ever hear talked about, but I mean, one of the most important things. Also, I was just thinking about the soundboard there. We have to have some Eddie Murphy, Dan Aykroyd, Trading Places sound effects on there. So if you haven't seen that movie, get familiar with that movie, because we're definitely going to have some sound effects. And if you have any good ideas for great sound effects, we have a very fancy board with lights on it now, and they're all different colors. So what do we have? 6 different spots?
Yeah. Oh, no, you can just keep arrowing over. You got like 30 up, 40.
Oh, it's going to be sound effect.
Oh, my gosh. Yeah.
I know people love sound effects all the time, over-the-top sound effects. That's really what people like.
Yeah. I wish I could play this air horn on here, because it was just amazing when it was working. I just haven't figured out how I stopped it working.
Sound.
Yeah.
It's pretty. We'll have fun with that, and we're going to expand. We're going to do daily market updates. We'll be talking a lot more about that too. So that's going to be in the days ahead. Definitely going into winter, that's going to be an option for people.
Yeah, I'm trying to talk John into actually having video with this. So if you want to see the video version of the podcast, so you actually can see how
the magic,
beautifully John dresses.
The magic, yes.
The magic. Yeah, you can see that he is actually wearing pants today.
Business extreme casual.
I like it. I just heard a story about Dockers. I'm not going to get into it here, but let's just say the marketing behind Dockers was unbelievable. That's a whole different kind of marketing, but they defined what business casual was, and then sent that out to every, like, the top 1,000 companies, sent it all to their HR departments. Here's what business casual is, and it was all by Dockers.
And that's what I'm trying to accomplish. One man trying to accomplish this, trying to make it a little more business casual on Fergus.
Yeah. So you're saying Adidas sweatpants is the new business casual.
Today was sneak out of the house fairly quickly day, yes, and it was very dark, and I had the actual wear that I was supposed to wear, jeans and regular clothes here, but it never happened today. I do have those clothes at the office, but it'll make me a little more honest, I think, if we're on YouTube.
I like it.
Yep, I'll have to dress accordingly.
Oh, sit behind a desk, you'll be fine.
Yep, exactly. We need to order some more foam for soundproofing. Hopefully this sounded all right, but we're moving into a different little studio, and lots of big changes coming.
Well, John, why don't you tell everyone how to get a hold of you, and we'll close out this episode.
218-731-1578.
Thanks, John.
Bye.
Positive, John. You're a bull now.
Well, yeah. We'll go over that in the corn, as a matter of fact.
Are we?
We'll settle this debate this time.
Are you going back to your roots, John?
What am I in corn? Well, I'll be wishy-washy, so yes, I am going back to my roots. Yeah. Choppy. We'll call it choppy.
Yeah, when
you don't know, you call it choppy.
Yeah. I like that.